Today, we are going to touch on Ethereum. Is it time for it to rally? Or we think it's going to maybe sink again? We'll find out coming up soon. All right. If there's nothing more, I would say, important in the market than Bitcoin, it's definitely Ethereum. Uh, Probably because it has most of the share. I think I saw somebody post the other day that it was like having a huge burn rate. Even though the gas is still pretty high, um, some of that I feel like doesn't even matter when it comes to technicals, right? We got all these fundamentals that people could that come into play, and a lot of people think that it's gonna, because of this, that's the reason it's gonna fall and whatnot. I have a feeling that's the reason why we saw Matic have such a rise is because Uniswap adopted it. And Maddox have been having some great time. However, even though ETH is going through this transition phase, I still think ETH is still going to be on top, mainly because everybody's building everything on top of it. Yeah, people are building things on top of the Polygon chain. People think are building things on Binance a lot. I think Binance is doing great. We just got back over. Well, I know we touched over 500 for sure. We may have to look into that one really quick too. But I think ETH is the number one thing we need to look at. All right, and let's take a look at it now to see what it's going to do. If you've ever seen my information before, I'm a smart money guy. If you don't know what that is basically don't be dumb money. What it means by don't be dumb money is don't trade like the herd, right? Think like the banks. Think like a huge institution would, because you were taught a specific way to trade. And if you're taught that specific way, they know how you're going to trade. So if they know how you're going to trade, what are they going to do? Trade against you. So they leave subtle clues behind, and they let us know exactly where they're taking the charts. And that's what I'm here to teach you to, okay? So if you've never seen my stuff before, if you like my stuff, what I'd like you to do, go ahead, hit that subscribe, hit that like button. I'd love you forever. And I'll even call your mom and tell her that she's the best cook in the world. How about that? Sound fair? All right, good. All right, so let's head on over to the charts. And what I'm looking at here, I'm looking at the monthly. Right, I'm looking at the monthly of Ethereum. And the reason I'm looking at the monthly is because we have to take into consideration all things. We can't just look at a 5-minute chart, can't just look at a 15-minute chart to figure out what is going on with Ethereum. We have to look at it as a whole. So I like to look at the monthly. Now, even though we are halfway through January, you can see that the January candle has already dip down further, all right? And this is what I love about this candle. And this is why I think we're going to have a rally. You have the bullish order block starting right here, which is the body of the last down candle before the up candle that closes above it, right? Which makes this a bullish order block. All right, that was September. All right. So we get up here to November, hits a top. I don't know why. Let me see here. This one's on FTX. Let me see what exactly the top hit is here. It was pretty close. It was getting near 5,000. We were getting near 5,000 for that top, but it wasn't exactly there. About 4,900 almost. 440. Well, it just decided to move on me all of a sudden and not come back. There it goes. All right. 48.69 is what it's showing at the top of FTX. I'm sure it was somewhere close for everything else. Coinbase, I think it may have been like 4,900. I don't know. Either way, there was a top there. All right. So it started to, and this is where we have to decide where we're at in the market. Are we on a retrace or are we on a reversal? All right. I think we're on I think that was just a retrace. Right. That was just a retrace. This is not a reversal. And the reason being is because you do have the order block. It did enter the order block. Now, usually what it does when it hits the order block is it will, boom, send it off going up, skyrocketing, like it kind of did here. You know, if we take a look at this one, I may have to change it up a little bit, but yeah, I will. If we take a look at this one, you can definitely see that it touched into the body of the order block and decided to take it not much lower than that. It was just pretty much exactly the same. So let's see, it was 2707.1. So here was the other order block, which is your last down candle before your last monthly down candle before your up candles. Both of these would be considered would be considered them, I guess, engulfing the previous down candle and closing above it, which would make this your bullish order block. So it comes down, barely touches the bullish order block, boom, moves on, has a huge takeaway, right? So we come back up. Now we're in the pullback. We would expect almost the same thing, or at least that's what we would hope. Instead, it pulls back a little bit further, and it gets down to the sell side liquidity of the month of October. It just dips down below that. Now, the sell side liquidity here was 2968.4. The actual low here, 2921. So about 40-point difference, right? What's it? Or $40 difference, I guess you could say. Within the scheme of Ethereum, isn't that bad? We got below $3,000. Everybody started freaking out. Yeah, but you have to think about what it was doing while it was getting down below that $3,000. It was taking out all the people who had probably set, you know, their buy limits right at around $3,000, thinking that, hey, this is a safe spot. This is this is where support is. They were seeing that from somewhere, and that was probably this monthly candle. If we move on to the weekly, and now I changed it over to Kraken, and the reason I changed it over to Kraken was because there is, in that same area where we have this pullback, where we're at right now, we have the weekly order block, and it's a bullish order block, right? So if we were to actually go into the monthly of this and kind of compare it to what we were just looking at, all right, you see this pull down, barely touch it, take off. You see this come up, pull down, and where does it get to, right? Gets below this guy, right? So the reason I have this measured out here in the Fibonacci, right? And it gets a little bit more than halfway through. Gets just almost to the 61.8% of it pulling back. So it'd be around, I forgot what we said it was in the last one. Let me actually put that back out there again. 29.21. So here, I think it's pretty much the same thing, or it's very, very close, if not. If I would actually go to the weekly, this is the problem I had with Kraken earlier. I don't know why it does not want to just. You have to actually reload it for some reason. Give me 1 second. But if we go to the daily, how about we'll just skip all that. We'll go to the daily. I showed you where the weekly was, right? The weekly bullish order block. So that would be your last down candles, right? So that's your weekly bullish order block right here. Your last down candles before the weekly up candle came up and closed above it. Let's see if it's coming back at least now. It went to KuCoin for some reason. Yeah, I don't know. This thing. There we go. On the weekly. Here you go. You have the weekly order bullish order block. So it's the last down candle before the next up candle closes above it. Boom. There's your bullish order block. So once it drops back down, and you can see it actually came back down and touched just inside of it before. And I thought whenever it did that, it was going to rally on. But because I didn't want to go, away from the trend. Trend is your friend. No matter what kind of trader you think you are, do not try to even think about calling reversals. I do not try to call reversals. I just try to look at where we are at in the pattern. And if we are continuing this, if we look at this on a monthly basis, as we have been, we are still on an uptrend. No matter how you look at this, I don't think this is a reversal. We get down to the bottom. It clears the sell side liquidity of the low on the monthly, right? Weekly, we're into the bullish order block now. After we went below the monthly, right? The monthly sell side liquidity. So the monthly would have been, I think, somewhere around in here. Yeah, somewhere in between these 2 weeks, because this is the weekly. You got to think. So the monthly closed somewhere in between these 2 weeks. So we get below the monthly, right? And now, boom, what did it do? And it starts moving upwards. Now, once we get to the daily, is where we get even more interesting information. So, daily pulls down, gets a little bit about halfway through the weekly bullish order block. Doesn't get exactly weekly. That's what I usually love to see, is when it gets exactly weekly, like this wick here, and then take off. But then it almost does it, pulls back just a little bit more, right, to give it a little bit more of a discount price, right, for the smart money to buy. And that's where they decided to buy and send this thing back going up. This is why I think we're going to start rallying again. Now, what did it do? It left a daily fair value gap. So in between this day here, January 10th, January 12th, we left a little bit of a gap. What happened on the 14th? Pulled back into that gap, just about a little bit more than halfway again, right? So if we were to actually put a fib, and let me get it off the... Yeah, let's actually pull it into... It's close enough. So if pull it into that, pull this down a little bit. Looks like I overshot it. Again, comes down just about to the 61.8%. Just about that. Before it, boom, it turns around and sends it off going the other way again. So weekly fair value gap, almost halfway. Daily fair value gap sends it back the other way. So we're looking at here now. Look, we come up here, boom, boom, 2 equal highs, pretty much as equal as high as this daily high as well. So what's happening here? Well, let's drop down to the 4-hour. So it looks like it gets about halfway into this order block. The order block is your last 2 green candles going up. A little bit more than halfway. Again, if we were to flip it around, let's actually do that. Now, whenever I do this, I usually go with the bodies. I don't go with the wicks, because the bodies are where you're going to see most of the action. It's where also, if you were to use different, brokers, like instead of using Kraken, if you were to use KuCoin, if you were to use Coinbase, doesn't matter. They're probably going to be about the same if you were to use the bodies rather than the wicks. If you were to use the wicks, you might get some different information. But look, you use half of that, or not half of that, but about it comes up into almost the 6.8%, coming in the opposite direction, right? So it's coming into it, going more than halfway, almost to the 61.8, comes back down, gets inside of the weekly bullish order block again. What does it do? Boom, jumps up. Now, why does it do a third one that just tries to just run up, touches it, and pulls back down? Well, that is basically that's called a liquidity run. So anybody that's going short on this, it kicks them out because they're probably following it, putting a very tight stop loss, and then it goes boom, and it just kicks them out and takes their money, right? So if you're ever deciding to go short on something like this, make sure you leave your stop loss intact. That way, when it comes back down into this fair value gap that it did, you can close out the trade. Or I wouldn't even close. I wouldn't even have went short there. I would have waited until it came back into the fair value gap and then put a long on it. So, because what that's doing is it's creating basically, buy side liquidity that's just above these highs. And that's what it's trying to get to next. So that's why I think we are on a comeback with Ethereum. Now, I'm looking at this. I'm not seeing any gaps that we had been seeing before. All right. Generally, what will happen is that you will usually see a small, inside, I guess you could say, candle. So something like this, you see this candle that drops. This is the last one that drops, gets into more than halfway through the weekly bullish order block, right? And I didn't mean to move that, so I'm gonna move that back. And then you see like these next two candles here. This one comes up, pulls back. This one comes in, goes up a little bit higher, pulls back. So now you have two candles right here that are within this larger candle that looks like it's going to be pulling back. So now that we have two inside candles, to me that is a sign of we're about to explode, or we're about to push out. Because if we didn't have these two inside candles, that's kind of like a consolidation inside of a larger engulfing candle, right? And then all of a sudden, boom, we get above the large, engulfing candle. Not both of them, but it gets to about halfway through of this top one, right? A little bit more than halfway through. Pulls back again. And then, boom. Then we take off. Now we clearing the highs here. The highs here. Almost cleared the highs here. Didn't matter. Pulled back. Touched the top. This is what caused the gap. And then, boom. Takes off again. And now we have daily high. This is what was a daily high. So it comes up. Touches that. Pulls back into the weekly fair value gap. Daily high again. Pull back. Now we hit the daily fair value gap here. This is the weekly fair value gap. So we have the daily fair value gap inside the weekly fair value gap. Gets about halfway through, a little bit more than halfway through. Boom, takes it the other way. All right, this is why I always tell people to watch those fair value gaps, because they are the most important thing to watch. All right, and if we were to pull this even back here, look, you can almost see it coming. This daily fair value gap, because it already created one. Not on the daily, but on the 4 hour. So on the 4 hour, if you draw this 4 hour fair value gap out, what does it do? Comes up, touches the top of it, pulls back, creates another 4 hour fair value gap, and then it wants to run through them, right? Wants to run through them after it creates those lows, makes those inside candles, and then boom, explodes. So that's what you have to look for. So now what is it doing? So now this candle comes all the way down, right? You see this? So this is what we call redeliver rebalance, meaning that since this candle comes all the way down below this candle, ignore this wick. Ignore this wick. Ignore this wick like it never even happened. because now this is a fair value gap. So now this is what it's going to be reaching for. It's going to be reaching for this one. Once it gets to this one, it'll probably do a little bit more of a pullback. Oops, why did it do that? I have no idea. Take it back to auto. Pull it up. All right, so it'll probably be reaching up toward this guy, filling it up, which as you can see, if you actually have this as a full Fibonacci from 0 to 100, that 127% comes in just up at the top of this fair value gap, interestingly enough. So it's almost like it's gonna fill that up, pull back, make sure it's full. Oops, didn't mean to move it again. Hit the top, pull back. Again, once it does that, that means that this is no longer what I'm looking for. I'm looking for a word here, and I can't think of it. But anyways, it fills it up. This right here is acting like it's a gap, but it's not. Imbalance, that's the word I was looking for. It's almost as if there was an imbalance right here because of that wick coming down so low. So it fills up this imbalance because that's what price does. Price looks to fill imbalances and take liquidity. That's two things price looks to do, right? So right now, the liquidity is just above this orange line here at 34.14, right? Why? Because we have 1, 2, 3 highs right at that area. So everybody is expecting it to pull back once it gets to that area again. And what is it going to do whenever it gets to that area? It's going to run through it because everybody else is expecting it to pull back because they think it's a safe spot for it. They think it's a safe resistance area. It's not. That's the thing. That's the trick. That's what smart money wants you to believe. They want you to believe that this is a safe space for it to pull back. Right now, what it's doing, it's pulling back into a 4-hour bullish order block. Almost just about halfway into it. Probably soon enough, it should turn around. If not, it may get to the bottom of it. I don't know. I wouldn't expect it to get any further down because we've already had one wick come down into this order block here. This is where the order block is. And then we've had this wick come down and touch the top of it as well. So if we were to draw two, right, there's the body. This wick comes down, touches it, right? You guys can see that. Make it up wider just so you guys can. And then now let's draw the top of the wick. Boom, there it is. This one comes down, touches the top of the wick. And then boom, sends it the other way. Sends it the other way, comes back. Almost gets to the top about to where this green candle is. Now this green candle here would be the breaker. Why? Because you have a low. This would be your low, right? High. And then you have a lower low. Lower low scenario. Now, just because this comes lower, that doesn't mean anything. You had this pullback first. This pullback that created a low. So this is the low, high, lower low, which means you have a breaker right here at this candle. I'm going to put it on the body only. So it runs through the breaker, pulls back. And then also we have the bullish order block. I guess I can make that a different color really quick. There we go, bullish order block. Could get down to the bottom, maybe not, I don't know. More than likely this thing's going to turn around and then start moving up back to this area. And once it gets up to this area, that's where I expect it to, it could do something like this and then get close to here, do one more slight pullback, and then boom, punch up, punch through. It could pull back even further, but then it's going to punch up and punch through again. Next thing you know, we're up into this area here. And then it's going to fill this. Whatever it has to do to fill that for, and then may consolidate for a second, and then boom, back up into here. Now we're up into the actual fair value gap. Now I think it'll get about, oops, didn't mean to move that. It'll probably get about halfway into this order block here, or sorry, fair value gap here. Now, this is a daily, if I'm not mistaken. Yes, the daily fair value gap there could reach about halfway up into here. Now where is halfway up into there? The start of the bearish, well, it's the start of the movement of the bearish order block. Not really the actual bearish order block, because your actual bearish order block is going to be right here. It's going to be your last up candle before the down candle closes below it. But this down candle comes so far down, it closes below this up candle, and this up candle. So it could cause problems here, here, and here. But it's wanting to get into this fair value gap first and fill it up. And then you could see it run up and hit this the top of this fair value gap, which is 36, 37, 65. Pull back a little bit more, maybe get into it, touch just a little bit into this fair value gap, and then start running. But I think we are on this pullback into, I mean, the whole point was to let you know that we were just on a pullback. That's what we were on. Now we're done with the pullback. So now the question is, where is it going to next, right? And that's what I'm trying to show you here. We're done with the pullback. So now we're going into these fair value gaps. We're going into where the bullish order blocks are inside the fair value gaps, where it could give you trouble. So if you're aiming, or if you're in a long, I would say first wait and see where this, how far this could pull back, which I don't think is much further. I mean, we're getting to the 15-minute of it. Look, it gets down into whatever that was on the 4-hour. I think it was oh yeah, that was, sorry, the bearish order block. Okay, so it did. It came down, covered the full bearish order block to the body of the candle, and then boom, sent it the other way. So while we were watching it earlier, it didn't even come down all the way into that area. So it has pulled down and boom, completely filled the bullish order block, and now it's sending it the other way. So that would have been the perfect time to trade right then, in my eyes. Not that I'm giving anybody financial advice. In my experience, these are the kinds of things I see. Because look, that's what it did with this one too. So we were in this consolidation. Right, we're kind of it's almost like an expanding consolidation. So it comes up, pulls back, expanding consolidation, boom. Now it's going to take off. Anyways, that's all I got. That's what I wanted to show you guys. I want to let you know that's what we're looking at as far as Ethereum is concerned. I don't think we're going to see much more of a pullback. I think we are done with the pullback, and I think we're going to see it seeing higher prices. So. With that being said, I would like to thank you all for watching this video. You guys are so kind. I love you all very much. And remember to always keep your pants on.